There's nothing the Fed can do. All the Fed can do is raise and lower interest rates. It can create money, it can create inflation, but how is that going to benefit African Americans? In fact, everything the Fed is doing is disproportionately hurting African Americans, because when you create inflation, you have a disparate impact on the poor. And so if African Americans are overly represented among the poor, then they are disproportionately victimized by the policies that the Fed is pursuing.
Peter Schiff expresses concerns about its policies disproportionately impacting African Americans and the poor. He questions regulations, holding them accountable for the 2008 crisis. Schiff challenges Powell's view on the dollar's reserve status, stressing its role in America's economic dominance. He raises alarm over the expanding balance sheet. Disputing Powell's claim of a strong labor market, Schiff points to low wages and part-time jobs as signs of economic vulnerability.
They're trying to blame Silicon Valley Bank on just, rogue bankers that were trying to make a profit. And Powell pretty much agrees. Yeah, this is what it was. It was it was just bad management. And completely ignoring the role that both the Fed and Congress played in allowing bad management to do that. I mean, yes, they wanted to maximize profits, but had interest rates not been at zero, they wouldn't have been able to maximize profits the way they did had they not been incentivized to take risks by the Powell put, or the Bernanke put, or all the puts that preceded. The idea that the Fed would bail them out. Had their depositors not been protected by guaranteed bank accounts, had their depositors been more involved in putting pressure on the banks to mitigate risk, because there was no government guarantees, none of this would happen in a free market. They all want to ignore the impact of government regulations, and in fact, specifically, the way the banks are regulated. If you as a bank make a loan, the government requires you to take a haircut to mark down the value of that loan on your books. But if you take that same money and instead of loaning it to the private sector, you just loan it to the government by buying a treasury, or you buy a government guaranteed mortgage, the U.S. regulators say, okay, you don't have to mark that down at all. We're just going to assume you can never lose money in that. And so that's the reason that they loaded up on these bonds that lost so much value, because the government said, if you buy those bonds, we're going to allow you to value them at par, no matter what they're worth. You never have to take a haircut. You never have to write them down. So the government encouraged them to buy these bonds, and now they're criticizing them from doing exactly what they incentivized them to do. Okay, another question that Powell got early on at the House testimony. He was asked about the dollar's reserve currency status, and somebody asked him if he thought the U.S. owed its economic dominance to the reserve status of the dollar, or if the dollar was the reserve currency as a consequence of America's economic dominance. And Powell said it was the latter. And I think he's wrong. I think initially, yes, that was the case. The reason that the dollar became the world's reserve currency was because we dominated the world economically. But not only did we dominate the world economically, the dollar was backed by gold. As I've said many times, the dollar was basically a weight of gold. And anybody that held dollars held gold, because you could take your dollars to the U.S. government and they would give you gold at a prefixed rate. But today, I would say it's the reverse. The reason that the United States is still the dominant economy is because the dollar is the reserve currency. I think while the dollar status was once a product or a byproduct of America's dominance, that dominance is now completely dependent on that status, because when the United States got that status, we used it like a crutch, and now we have been dependent on that crutch. It's what enabled us to outsource all of our manufacturing. And as the U.S. economy became less and less competitive due to regulations and taxes and things like that, rather than pushing back against the regulations and taxes, we were just able to run deficits and import the stuff that we couldn't produce because of the dollar's reserve status. So it's like because we relied on that crutch, we became crippled and then needed the crutch. Because initially we didn't need it, but it was given to us, and so we decided to use it rather than just walk on our own 2 feet. But now we're so dependent on that crutch because the economy is, our legs have atrophied. We need it, and you take it away, and everything's going to collapse. And it seems that Powell doesn't really understand that. Now, he got another question about the balance sheet, and he was asked, is he concerned about it? Because it keeps growing. And the congressman who asked him this question actually asked him a good question, because he pointed out the inherent problem, which is when the economy is bad, we ramp up the balance sheet very quickly when anything goes wrong. But then when supposedly times are good, the Fed is very slow to shrink the balance sheet. And so that you never withdraw in good times all the liquidity that you put in bad times. And then when you get the next economic downturn, since you've never drained all the liquidity that you put in during the last downturn, when you add more liquidity, the level keeps going up. And so the size of the balance sheet is going to grow in perpetuity, because before the Fed ramped it up to $4.5 trillion, then it was able to bring it back down to $3.5 trillion. Never got back down to $1 trillion. And then all of a sudden we get in trouble and it's $8 trillion. Or whatever it was, almost $9 trillion actually. And so now it's starting to come back down, but we're probably not even going to get below 8 trillion before they have to blow it up, to 12 or 15 trillion or whatever. So the point is, are you worried about this? Because it keeps on growing. And Powell really didn't think it was a problem. He said, yeah, we're concerned about the growth of the balance sheet, but that's kind of where it ended. I mean, he never really talked about how bad it's going to get or addressed the underlying question. How is it going to stop growing? Because and he mentioned, well, we're shrinking it faster now than we did before. Yes, but it's so much bigger now than it was before. And it's still massive. It's still nowhere near the level it was when it stopped growing before. So he is really, sugarcoating the degree of this problem. Now, another point he tried to make, which I disagree with, is he kept talking about our strong labor market and how the U.S. economy is really being driven by this strong labor market. And we don't have a strong labor market. I mean, I don't care that we have a low unemployment rate. I don't care that we're creating a bunch of jobs. That in and of itself doesn't mean we have a strong labor market. You have to look at the quality of the jobs, and you got to talk about, real wages. So if the jobs that are being created are by and large low-paying jobs, part-time jobs, that doesn't really smack of economic strength. The fact that so many people are forced to moonlight, the fact that one job doesn't provide enough income to cover your bills, the fact that so many people have to take second and third jobs, that is not evidence of a strong labor market. In a strong labor market, you just need one job, and you can earn enough money in that one job to cover your bills. You don't need all these part-time jobs in a strong labor market. Also, real wages have been falling. That's a sign of a weak labor market where workers don't have the bargaining power to get a real wage increase. So everything to me doesn't show that we have a strong labor market. We have a weak economy, and so people have to work a lot harder.